It's February. Smartest thing, David, I heard in December was from my colleague John Farrow, who said simply, we're not going to have a clue what to do until March. Is that where we are? It's so unstable after that historic December that you're waiting to really get a belief until February or even March?
Well, I do think a lot has happened, and obviously the Fed reset or pause in terms of monetary policy, I do think has been crucial. But you're also absolutely right, Tom, that March is a key month because at the moment I think the market has priced in weakness out of China for the first quarter. So right. I think what the market is really looking for is that as we go into March, ongoing policy easing from Beijing, and that to start feeding through to the data into the second quarter. I think the market again has priced nothing really from the ECB in terms of news until its March meeting, and then I think the focus will be on their forward guidance on things like bank financing. And then, March will also obviously be interesting and crucial, I think, in terms of the relationship between the US and China in terms of trade. And the story that you've been running has been very important, the way, intellectual property right. and forced technology transfer. So you've got that in the background, which, if anything, is heating up. But the market is hoping that we'll get some kind of truce in terms of tariffs. If we don't get that, then I don't think we're priced for that. And I think it could get quite a nasty start to March. But that's all March, yes. And in the meantime, keep on grinding.
Could the emerging market trade turn around by the time that March comes? It's been a good month in January. They've started on the back foot today. It's only one day, but why such a high conviction in EM, David?
Well, I think in terms of emerging markets, we also have a situation where I think investor positioning has been, or is actually pretty light at the moment. I don't think we've had the kind of inflows into the asset class that characterised the start of last year. If anything, 2018 was characterised by people, with tourist money, if you like, getting out. And then I do think in terms of where the Fed is, where valuations are with respect to emerging markets, that we're set up, I think, for the emerging market rally to continue. I think into March and then beyond, then you start getting some of these global factors like China, like trade relationships, whether the Fed comes back into play or not. But I think that's a story for Q2, not for now. And I think in the near term, you need to be invested in emerging markets.